Hi there, I'm Irk and this is my channel, Get Irk. Can uranium generate explosive gains for your portfolio, or is this sector dangerously radioactive? With so many geopolitical concerns going on right now, and the transition from fossil fuels into clean energy, there's no question that the world is facing an energy crisis. Many of the countries don't want to use fossil fuels or coal because they burn so much pollution. However, we're nowhere near where we need to be able to transition fully to renewable energy. There has to be a bridge fuel, and for me, that bridge fuel is nuclear energy. And the way I choose to play this sector is with the Global X Uranium ETF. With the ticker symbol URA. And I chose to play this space with an exchange-traded fund, which makes up a basket of the different players in the space. This way, if one fails or makes a mistake and goes bankrupt, I'm not completely out of the space. Yes, the ETF will get hit, but not nearly as much as if I only held that one stock. In this video update, I'm going to go over a buying plan of what I would do if I didn't currently hold shares in the URA ETF. And then I'll go over my own position and where it's come from since the last update, as well as where I plan to go with it in the future. If you'd like to learn more about uranium and why I think this is a really good sector to invest in, stick around to the end of this video where I will link to my original video where I go deeper in depth into the fundamentals of the space. In my last video about uranium, it was August of 2021. And as you can see, uranium is extraordinarily volatile, so you need to know that going in. This is a sector that can really move. The ETF made a high shortly after my last video in November of 2021 at $31.60, and the sector pulled back significantly throughout 2022 before URA found a bottom here in July at $17.65. So what I would do to develop a buying plan is to draw a Fibonacci retracement from its high to its low to see levels of resistance. These are levels where the ETF might retreat on its way up because there's previous resistance there in the past. After that, I draw another Fibonacci retracement, this time from its recent low to its recent high, to develop levels of support. These are levels where the ETF might actually find support if it breaks through and then pulls back to these levels, and this is where we could add to our position. Given that the ETF is closer to its 2022 lows than it is to its 2021 highs, I'd actually start my position pretty soon, and I'd look at the low of this day as a potential entry point around $19.40. However, because the markets have been so volatile, and this sector in particular is volatile too, I wouldn't start with my 50% allocation. I would start with a 25% allocation and then save the remaining 75% of cash to buy in levels on the way down in 10% increments. After this first buy at $19.40, I would skip the levels of support that we see here around $18.50, and I'd look in the past. I wouldn't want to go for the all-time low because it's possible it'll find support above it. So what I'd probably do is use the low of this day at $17.78 as my next buy. From here, we need to pull out on the chart to find new levels of support, so I'd switch to the weekly view and see where we might see things in the past. And you can see that the low of this week here at $16.76 might be a level of support. However, since that is relatively close to our most recent buy, you might not want to be that aggressive. So I'd actually look at the Fibonacci retracement here at $15.83, and you can see that there was support at the open of this week here at $15.71. So that might be my next buy. Once again, if you weren't feeling aggressive, you wouldn't want to buy here around $14.50. You'd want to look for the next level of support. So we'd move down to our Fibonacci retracement, go back in the past, and maybe use the open of this week here at $13.59. You can see that we don't have another Fibonacci retracement until way down here at $6.83. So what I would do is to look in the past again to find levels of support. And you can see that here we have consistent support right around these levels. So I'd probably use the close of this week or maybe even the low of this week at $12.25 as my next buy. Once again, if you weren't wanting to be that aggressive, you could actually shift it down to the lows of the week where you see that we've found support here too, down around $12 even. After this buy, I would go to the low of this week for my next buy right around $10. And this would give us a 75% allocation in the uranium ETF. And it might sound strange that you'd wait for it to sell off 66% and still only have 3/4 of your position, but that's the way I'd want it. I never trust any bottom. And so therefore I want to keep that 25% cash position in case it breaks through $10 and finds new lows again. And here you can see that we have two key buys. I'd probably make my first one here on the close of this week around $8.24. And then for my last buy, I'd look to the ETF's all-time low here at $6.95. At this point, we would have a 95% allocation in this ETF, but I'd still save that 5% cash on the sidelines in case something extraordinary happened. If the uranium ETF never broke through its all-time low, then that's fine. What I have is what I have, and I'd keep that 5% cash and use it in a different position sometime in the future. From here, let's take a look at my own position in the uranium ETF and where it's come from since our last video update. In my last video, I just made a buy on August 16th of 2021 at $18.48, which left me with a per share cost of $16.90. And I decided to let uranium run, which it surely did, as it reached new all-time highs. The uranium ETF hit a high here at $31.60, and you could see I got a little bit cocky. I thought maybe this was it and it was going to take off from here, and I wanted to increase my allocation. I broke one of my key rules, which is I really don't like buying up my cost basis. In other words, I don't like buying above my per share cost, because every time I do that, it raises my per share cost. And I did it twice. I made my first buy on November 17th of 2021 at $28.29, and then made a second buy on December 14th of 2021 at $22.72. The two buys raised my per share cost an additional 20.36%, up to $20.34, and the uranium ETF was not done selling off. As you can see, I wasn't done buying up my cost basis, and on January 14th, I made another buy at $22.58. However, thanks to a pretty substantial dividend payout on the ETF, I didn't raise my per share cost at this point. And then on January 24th, I made another buy at $19.59. After these two buys and the dividend, I was left with a per share cost of $19.77. Finally, a reduction of 2.8% from my last buys. And from here, it was time to let the uranium ETF run for a little while, develop some price action, and figure out what I was going to do from here, since it did sell off more than I anticipated. On April 5th, I finally got my discipline back and decided it was time to take profits, with a sale at $27.12. This sale lowered my per share cost 5.92%, down to $18.60, which was still above my original buy in the $17 range. Even though the ETF sold off substantially from its recent high all the way down through the summer of 2022 to make a bottom here at $17.65, I was a little gun shy, and my buy target was lower than that. So when uranium bounced in August of 2022, I decided it was time to take a little bit more off the table, with a sale that went through on August 25th at $22.72. This sale lowered my per share cost another 4.84%, down to $17.70, and my per share cost is finally lower than it was when I started buying this ETF back in February of 2021. Right now, my per share cost is $17.70, which represents a 4.73% increase from where it was at the end of the last video. However, it is a 1.5% decrease from where I initially bought this ETF. Because the uranium ETF has established some price action, I've decided my next buy is going to be above my per share cost at $18.05. However, that will only raise my per share cost up slightly, and it will still remain lower than where I initially bought it. My next sell target is $23.55, which is beneath the high of its most recent rally, where it hit a high of $24.34. And this is so that I have the effort to reduce my per share cost and not take it for granted like I did since this last update. If you liked this video, please hit like and subscribe, and I'll see you in the next video.